If we can touch that new day opening gap, I'm going to use that as an entry. All right, I'm long using the old new day opening gap. With these 3 down close candles here, I'm treating that as one bullish order block. This fair value gap, I like for that to stay open, so my stop loss is beneath it. This swing low comes in at 93 even. Instead of 10 contracts, I'm long 7 because the volatility is a little high this morning. I'm looking to take a small partial at the midnight open if I can get it. Risk comes off if we can get a nice closure above this SIBI. So we had this is a 2-minute chart by the way, but we had a small little fair value gap, traded into that imbalance, treated it as resistance, took us lower. So now if we can get above it, I would want that to treat, or I would want that to offer support. So if we could really dig through that, perhaps close past the midpoint, then I'll feel comfortable moving my stop. Let's go to a 1-minute chart. On a 1-minute basis, I'm looking at this here. If we can accelerate through that, then I'll take off my risk. Expecting that to be used as an inversion level. Stop loss looks large on a 1-minute basis, but that's because my entry is based on a 2-minute. Buying the new day opening gap with my stop underneath the low, because I'm not expecting this fair value gap to be traded soon. So ooh, my bad. Somebody just messaged me in the Discord. I don't know how to turn off the Discord notifications for DMs. I have the general chat room muted, but when I get DMs, it still plays a little sound. It's all good. Oh, that was you? It's all good, Sam. That's funny. I could just mute my laptop. Let's do that. So I'll take off my risk if we get a little bit stronger displacement. I really want to see us get above that inversion fair value gap. Eventually, I would want that to be used as support. For those who remember yesterday, I did take, or I lost a little over, a little over 0.5%. So if this was my live account, again, we're on paper because I'm done on my live, but to mitigate that loss from yesterday, if we can accelerate through that old daily low and previous day's low, those are old reference points for liquidity. I'll take one contract off and that one micro, and that's about 50 handles or whatnot. That will be used to mitigate some of my losing position from yesterday. So it's not real money. I'm not making anything off of that. But if I'm treating this like I would my live account, that's how I would recover yesterday's loss. Because if this trade were not to pan out, and if it were to come back from my break even or whatnot, at least I recovered yesterday. So I have my finger on the market order. Should we tag the old daily low? I'm going to try to capture the previous day's low there, though. And then a little bit more displacement, I'll move my stop to break even because I wouldn't want to see anything under this inversion fair value gap. And honestly, I could do it right now because we had inefficiency. I like how we opened, traded down, had no interest in trading to that fair value gap, displacing higher. So if we could work a little bit higher, then I'll trust placing my stop underneath this candlestick's low that holds the fair value gap. But I want this to offer support first. I want to see us work higher from here. This candlestick's low, 28.50. Moving my stop underneath this candlestick's low. It's underneath the down close candle, underneath the fair value gap, and underneath that new day opening gap. I might be a little aggressive with my stop because I wouldn't want to see anything past that. I'm going to move my stop to break even because I wouldn't want to see anything past this inefficiency. Whoops. Oh, my bad. Lock in, Tremaine. Lock in. Now, if I do get stopped at break even, it'll be no big deal. I'll look for another entry, but for me, I'm not really interested in seeing anything past this fair value gap. Really, I didn't want us to revisit the lower half of that inversion fair value gap. So, just for me, this is kind of my last line of defense for higher prices, and if I get stopped, I'll look for another re-entry. But so far, I do like the bodies right there. If we take out this swing high, then I'll take a partial there. It did tag that old daily high. You could have taken off a small micro just to recoup previous day's loss, but I want to see something a little bit more meaningful, so I'm not really settling for that. That's what's up, Bash. That's how you bounce back. That's good stuff. But I'm telling, man, as far as yesterday, when I tell you, like, literally, I was doing the market review, and I said yesterday's price action was kind of difficult, which I guess it was a little bit challenging, but I was looking at or doing the market review, and I was like, man, it traded down to the wick perfectly. The bodies were respecting certain levels on the daily chart, and it was just like, bro, I just wasn't locked in yesterday. I was literally just doing the market review, like, are you kidding me? Really, Tremaine? You didn't see that we traded down to the lower quadrant of the wick that you already had marked out on your chart from the beginning of the session? But, you know, it is what it is. I was just like, bro, be better. I'm watching midpoint of the inversion fair value gap. I want to see if we can get above that. Also midpoint in this down close candle, which is mean threshold. I wouldn't want to see anything past that either. In my opinion, I would want our job to be finished down here, because ideally I would want that to stay open. We came all the way down. The body's respecting the low end of it beautifully. So anything lower than that, then I'll just accept the break even and look for another trade. But I'm really not expecting that swing low to be taken out. But yeah, let's go, Bash. That's awesome. That's a great way to bounce back. Stay in the game mentally. Proud of you, bro. That's what's up. This is when I would like to drop down to like a 15-second chart or like a 30-second chart to see what kind of inefficiencies or volume imbalances or things of that sort that we have in here. Because if I'm not expecting the swing low to be taken out, I would want to see, do we have any fair value gaps or something like that in this move higher to offer support. But I may get the trading view premium or whatnot just for that reason, but I don't really use second charts for entries. Again, watching midpoint of the virgin fair value gap, I want to see that offer support. When we're trading above it here, I didn't even want to see anything in the lower half of this SIBI. So now that we got some closures above it, I want to see if we can get a spike higher above this high, and I'll look for a partial. Small partial, just 1 out of 7, because that's not really much as far as risk to reward. Sweet lover of a lifetime, I'll be there. Midpoint of that inversion fair value gap, looking for sensitivity. Like the entry, no drawdown on the entry. If we manage to get that partial above that swing high, then I'll probably hold the last 6, maybe for a full pool. We'll just see how the order flow's looking. I thought you weren't locked in because of demo. No, I trade my paper trading account, demo account. I trade that the same as if it was my live account. Like, I try to treat it, just because I switched to a paper account, I take it just as serious because, like, I'm improving. It's my time to get better, even though I'm away from my live account. So it's like sports. Like, you don't just take it seriously in the game when you play once or twice a week. Like, you take practice just as serious. So, no, as far as my risk management and drawdown protocols and all those things, like, I take my paper trading account just as serious because it translates over. Five-minute chart. Let's take this off for a second. This fair value gap, I want to see that treated as a breakaway gap. The next discount PD array that we have is this wick. And just like we highlighted with this 5-minute wick here, if you remember, you take that, you get midpoint, we open, trade it down, and you would want to see price supported in the upper half of that. And then if we put on our inversion fair value gap with that little wick right there, and you go to a 1-minute chart, don't want to see much lower than that. We talking about practice, not a game. Not a game. We talking about practice. Got some hoopers in the chat. I love it. A little spike above that high, I'll take something off. There we go. So 1 micro plus, we'll call it 45 handles or so. I think I got it a little under. There we go. Oh, there we go. So break even. So as far as signs that the trade was likely a dud, I like the way it looked as far as respecting midpoint of the inefficiency, trading higher, leaving inefficiencies open, entry there. Midnight opening price was an interest for me. Again, we talked about I was likely to take a partial there. But for one, okay, one of the signs showing that the trade was likely a fluke. Dow and ES were not looking bullish. ES a little bit, but Dow not having it. S&P was starting to rotate lower, looking a little weak. The Dow was just dropping. Nothing in the chart looked bullish, so that was kind of like a caution sign with that. Inefficiencies that I would like to see stay open, not staying open, so didn't want to see this traded to completely fill it in. Wanted to see speed above this high, didn't get it. This inversion fair value gap, okay, if you're bullish, if you're on side, I would want to see that offer support, completely trading through it here, completely trading through it again. So it's not giving any signs that it wants to have a nice energetic move higher. It was showing all red flags, if you will. So knowing when to get into a trade, when it's good, knowing when you're on side and all that, that's nice. But you also have to be able to identify, okay, it's looking weak. It's not doing things that I would normally like to see when the trade is good. So I like the low partial, and then the rest getting stopped in break even. And I'll see you all in the live stream tomorrow morning at 9:30. All right, peace.